Hi, everyone. This is Jason Bierk of Wall Street from Main Street. Welcome back to another Wall Street from Main Street podcast interview. Today's special guest is a returning guest. He is Secretary and Treasurer, also a director of the Gold Antitrust Action Committee, which is a not-for-profit, but they've been covering all the craziness in the global economy for decades now. Also, they sued the Federal Reserve Bank many times over the years. I want to get his thoughts on this as well. He is also the former managing editor of the Journal Inquirer. So he's been an actual journalist. That was his day job. And then he was doing Gold Antitrust Action Committee work, fighting the good fight on the side for many years as well. Chris Powell, thank you for joining me again.
Oh, it's a pleasure to be with you, Jason.
So, Chris, we're recording this interview on Wednesday, June 28th, 2023. Gold price has been smashed back down around 1900. I think it's a little bit above that right now in US dollars. But I want to get your thoughts on intervention in markets by governments and central banks. Do you think that they've been increasingly intervening in a lot of different markets over the last couple, really since 2008 financial crisis?
Well, I certainly sense that. We're very careful at GATA to distinguish between what we know and what we suspect. Our most contemporaneous data comes from the monthly statements of account of the Bank for International Settlements. We have a retired business executive in the United Kingdom, Bob Lambourne, who calculates the gold position of the BIS every month from their statements of account. And that position is pretty revealing of extensive intervention in the gold market by the BIS, which operates only for central banks. All the major central banks are members of the BIS. The BIS, whatever the BIS does, it's doing because its members, or at least one of its members, want it done. And the BIS is heavily engaged in the gold market, really every month. Doing gold swaps, which are basically moving gold around from central banks and bullion banks and the BIS itself to places where the gold is needed to tamp down a rising price. The Lambourne figures from the BIS showed over the last year that the BIS's gold swap position was steadily decreasing, going down almost to nothing toward the end of last year. And since then, it has been going up fairly steadily. It's now up above, I think, 100 tons. And that shows that somebody in central banking is very interested in intervening in the gold market. Now, we have historical documents and news reports that suggest this is very likely the United States intervening in the gold market to defend the dollar. In any case, the BIS's monthly reports document this intervention. It's contemporaneous, happens every month, and to me, it's the most compelling proof right now of constant intervention in the gold market. I don't think it's hard to imagine why this is being done, but fortunately for the BIS and central banks, the mainstream financial news organizations refuse to ask about it.
So correct me if I'm wrong, wasn't there a WikiLeaks diplomatic cable dump a number of years ago? I think Chelsea Manning was the one who released it. And wasn't there discussion of manipulating the gold price back then? I think in 2011 during the last spike where the gold price got almost to $2,000 an ounce?
Well, I remember those WikiLeaks documents, Jason, most for their quoting Chinese government news organizations, which had reports about gold market manipulation by Western central banks, and particularly by the United States, in order to protect the dollar and weaken competitive currencies. I thought that showed that not only did China officially know all about gold market intervention by the West and particularly by the United States, but since these cables originated with the U.S. Embassy in Beijing and were cabled back to the State Department in Washington, the State Department knew that China knew all about gold market rigging by the United States. So to me, that was the most important stuff that came out of those WikiLeaks cables.
Now, my first question was about intervention in different markets. So do you think that there's provable evidence that governments and central banks, obviously they're manipulating interest rates, so that they're manipulating money supply? I would argue that a lot of the inflation data, the GDP data, the jobs reports, a lot of these things are either heavily spun, managed, or outright economic propaganda or manipulation to different degrees. We also had a story, and we were discussing this in emails, that GATA didn't break the story, but they've been covering this longer than pretty much anyone else other than Zero Hedge. The CME Group, or Chicago Mercantile Exchange Group, they offer central bank volume trading discounts to central banks intervening in markets. So do you want to talk about that story?
Yeah, this has been going on for quite a while. CME Group runs all the major futures markets and contracts in the United States. And for years, it has maintained what it calls its central bank incentive program, which provides volume trading discounts to governments and central banks for surreptitiously trading all the futures contracts in the United States, not just the financial futures, but even commodity futures. And this central bank incentive program, it's on the record. You can find it on the CME Group's internet site. You can find documents that CME Group has filed with the Securities and Trade Commission and the Commodity Futures Trading Commission, confirming they have this program. We have asked the Commodity Futures Trading Commission, as has U.S. Representative Alex Mooney from West Virginia. We've asked the Commodity Futures Trading Commission if manipulative trading in the futures markets undertaken by or at the behest of the U.S. government are subject to the Commission's jurisdiction, or if such manipulative trading undertaken by or at the behest of the U.S. government is perfectly legal under the Gold Reserve Act of 1934. Well, the CFTC refuses to answer the question as to whether manipulative trading undertaken by or at the behest of the U.S. government is subject to the Commission's jurisdiction. Is it legal or illegal? The CFTC simply won't say. But the central bank incentive program that the CME Group runs and still has been running and still runs shows that such intervention by governments in the markets has been contemplated for a long time. Now, do I know that it's happening through the central bank incentive program? No, I don't. But I have to believe that the central bank incentive program was established because governments and central banks did want to intervene secretly in the commodity futures markets. And I'm pretty confident that the CFTC would not be refusing to answer questions about it if everything was on the up and up.
And for listeners who are not familiar, I wouldn't trust a lot of the investigations from the CFTC. GATA has firsthand experience with this. Wasn't it back in 2010, there was a silver market investigation? Gary Gensler, who was the head of Hillary Clinton's campaign finance team in 2016, also managing director of Goldman Sachs. He's currently the head of the Securities and Exchange Commission. He was one of the people in charge of the silver market investigation for years. I know Ted Butler was actually optimistic about that, him being fair and honest and objective. I'm not really sure why. But that CFTC investigation into silver market manipulation, I think it was a sham of an investigation for the most part. What was it, back in 2010?
Yeah, the CFTC investigation had a couple of investigations of silver market manipulation, and both times the commission came out and said that we couldn't find anything we could act upon. And then the Justice Department indicted various commodity futures traders precisely for gold and silver market manipulation and got them convicted. And the Justice Department's indictments overlapped with the period where the CFTC was investigating and said that it couldn't find anything. So when the CFTC couldn't find anything, while the CFTC said it couldn't find anything, the Justice Department did and got indictments and convictions. So the CFTC investigation of silver market manipulation could not have been terribly competent.
Yeah, I totally agree. And the evidence that actually came out in Discovery, and people can go look some of this up. There was journalists that were actually covering some of this stuff. The evidence that came out in the discovery process from the Department of Justice investigation and what the trial concluded in Chicago, last year in summer 2022, I think They only the large banks only had to pay a fine, and they threw a couple of the smaller, lower level traders got thrown under the bus, and they're going to maybe do some prison time, or they're going to be banned from working in the financial industry. But all the mid-level managers, the upper level people, and the traders who are getting in trouble the most, they said that they were taught how to manipulate the market and do all this stuff by all their bosses, and that it was wink, wink, nod, nod, just get it done, just make the bank money. And, business as usual for the banks. They pay a fine and keep doing the same bullshit.
Yep, the higher ups at the bullion banks have escaped any criminal prosecution so far. I know it's not surprising to anyone who's fairly cynical about the government in the United States, but nevertheless, the CFTC could not find any manipulation in the silver market, and then the Justice Department investigated for the same period of time where the CFTC was investigating, and it found plenty of manipulation and even got indictments and convictions. So to me, that's a pretty good job of discrediting anything the CFTC says or does.
And we shouldn't say that everyone at the CFTC thought that way. I know Bart Chilton, before he passed away, he was adamant. So he actually believed all the evidence, because I have friends who are speaking with him in emails and phone calls. So he was adamant there was evidence there, but he was only one CFTC commissioner, right? So all the other CFTC commissioners really didn't want to hear what Bart had to say.
Yeah, Bart was a good guy. I think he was a great public servant, and I dealt with him a little bit. I think he knew very well what was going on, and the problem was he didn't feel free to be totally candid about it. He was 90% candid about it. He said, something improper was going on, but he couldn't say exactly what it was, and I think he couldn't say because he knew that the U.S. government was behind it, and it was working through intermediaries to manipulate the monetary metals markets and other markets, and he knew that the government claimed that this was perfectly legal. So I think he knew what the score was, and he knew it was immoral, it was unfair, it was deceptive, it was really contrary to American values, but he couldn't quite say exactly what it was. But he told the world that something wrong was going on, and God rest his soul.
And also the other part of this equation for the large banks, if there's a market to manipulate or trades to front run, and high frequency trading is basically just front running their own customers by milliseconds and stuff like that, and then selling them the shares. If the large banks can make profits manipulating markets, I mean, no one's going to prison really post 2008 financial crisis. They just pay a fine. Look at all the large banks, all the different markets they've manipulated, whether it's commodities markets, foreign currency exchange, LIBOR, all these different markets that the banks have manipulated. At best, they just pay a fine.
Yeah, it's very, very distressing. But, I've got to admit that I am, much less concerned about manipulation and other crimes undertaken by the big banks than I am concerned about the government's involvement in the manipulation. I think for the most part, the big banks in the key manipulations are acting as brokers for the U.S. government, as intermediaries providing camouflage to the U.S. government. But I also think they're front running the government's own trades, which is a big opportunity for the banks to make money on a sure thing, exploiting their privileged position as government brokers.
So our mutual friend, Rob Kirby, before he passed away in 2022, he was adamant about this as well. He was adamant that the Exchange Stabilization Fund was the one manipulating gold and silver markets along with the BIS. And for the people that don't believe that the BIS is involved in this, there was actually, and Zero Hedge covered this with screenshots, there was actually employees listed on LinkedIn in the gold derivatives trading department at the Bank of International Settlements. So they had their LinkedIn profiles up there that they were involved in gold derivatives trading at the Bank of International Settlements.
Yeah, the BIS has gold traders. I remember the name of their head trader. It was in the Zero Hedge report. It was kind of an odd name. I should remember. But more than that, Jason, this is how it has always been done. You go back a few years and you find the autobiography of Jelle Zylstra, who was the head of the Dutch Central Bank and was also simultaneously president of the BIS. He wrote in his biography or autobiography that the gold price had always been manipulated at the behest of the United States. You go back to a speech that was given at BIS headquarters in Basel, Switzerland. I think it was in 2008. It's on GATA's internet site by William R. White, who was head then of the Monetary and Economic Department of the BIS. He gave a presentation about what he called, I guess, the five main purposes of central bank cooperation. And one of those purposes was what he said was to influence asset prices, especially gold and foreign exchange, in circumstances where this is thought to be useful. Here's a top official of the BIS telling people who are friendly with the BIS that a main purpose of the BIS and working all together with the major central banks is to manipulate the gold price. The documents are all over the place, Jason. If anybody really wants to look at them, you can find them on GATA's internet site, or you can write to me and I'll find them for you.
Yeah, I totally agree. There was also a book that came out after the last gold price spike when it went up to around 2000 the first time back in 2011. Within a couple of years, Dmitry Speck put out a book called The Gold Cartel, highlighting how the European Union, the European Central Bank, the officials at the European Union and European Central Bank were going bonkers with phone calls to the Federal Reserve Bank and the Treasury telling them do something because the gold price was going crazy and the euro was in peril.
Yeah, Dmitry has done good work over the years. But, I just try to tell people that evidence and documentation of gold market intervention by central banks for the purpose of suppressing the price and supporting government currencies and suppressing interest rates, the documentation is all over the place. It's on GATA's internet site. It's not that we have found it all. Much of it has been found by other people. We're really the archive of it, I think a pretty convenient archive of it. Back in, I think around 2001, I think there was a secret staff report by the staff of the International Monetary Fund. It explained that the IMF, which is the record keeper or the official number of gold ounces in national reserves, the IMF was considering requiring its member central banks to distinguish in their gold reserve reports the gold in their vault from the gold that they had leased, which they thought would be a much more honest presentation to the world of how much gold central banks really have and how it's deployed. The IMF staff did a survey of its central banks and found that they were all freaking out, saying, no, we can't disclose how much gold we're leasing because that's market sensitive information. If the markets knew that, they would trade gold differently. We've got to obscure the real gold position by central banks. The IMF staff put this into a report acknowledging that central banks want to obscure their gold reserve data and conceal their gold loans and swaps and leases. And it's on GATA's internet site because somebody got a hold of it and it's marked secret or confidential or something like that, but it's on our internet site. This is the IMF staff saying, nope, central banks can't be required to disclose their gold swaps and leases because it would expose central bank intervention in the market.
Before he left Congress, didn't Congressman Ron Paul, didn't he get Alan Greenspan under oath in one of the congressional testimonies when he was grilling Alan Greenspan to actually admit about the gold swaps?
No, he didn't. And I've always been a little disappointed in Paul for not putting the crucial questions to Federal Reserve officials when he had the chance. But I guess he really didn't have to because I guess it was 1998 or so. Again, this is on our internet site. Greenspan made a presentation to Congress in which he was trying to discourage Congress from regulating derivatives. Basically, he was telling Congress that the Fed could take care of derivatives. And he made the very frank statement that central banks stand ready to lease gold in increasing quantities should the price rise. And that was the head of the Fed admitting that central banks don't lease gold for the reason that they were giving the public, that is to earn a little interest on a supposedly dead asset. They were leasing gold in order to control the price, to keep it from going up. This is testimony that's still on the Fed's internet site. It's on GATA's internet site. Central banks stand ready to lease gold in increasing quantities should the price rise. I think I got my my senator at the time. I think I got Joe Lieberman to press Greenspan about whether the Fed was leasing gold. And as I recall, Greenspan, or excuse me, a deputy replied, "Oh no, this the Fed wasn't leasing gold, but Greenspan was speaking about gold leasing from what he saw that other central banks were doing." In any case, you had Alan Greenspan telling Congress on the record in testimony that central banks lease gold to keep the price down. I mean, what more do you want from me?
And didn't we just get a mission the last 12 or so months from a former London bullion banker? I think the guy his family was bullion bankers in London for generations. Ambro or something or Umbro was his name or something like that out of
Peter
London.
Hambro.
Yeah, Peter Hambro. And he was talking about just how all the leasing and the swaps and all the craziness that goes on in London.
Yes, it does. I mean, listen, the whole gold trade right now is really, it's a game of musical chairs or pass the parcel. The central banks are working with the bullion banks to gather enough real metal to be applied to hot spots in the market to tamp the price down. And they're moving gold around in order to tamp the price down. And one bank will have a debit on one day and a credit on another day. They're just making what they consider the most efficient use of the real metal that is available, applying it to the market where and when it seems most necessary to keep the price down. That's what they do. I mean, look, rigging markets is what central banks were invented to do. They originally were doing it to lend against good collateral to prevent market crashes, and now they're intervening in markets every day, not just the financial markets, but probably the commodity markets as well. Or else, why does CME Group run the central bank incentive program? Why does a central bank want to be prepared to trade in pork bellies? Well, they can. It's all set up. The mechanism is there for central banks to trade and secretly, surreptitiously in all futures markets in the United States, and this can be done in a way that masks the governments. The governments using the central bank incentive program have to trade through exchange-approved brokers, but that provides camouflage to any government. Government doesn't have to open an account with CME Group. It can just have an account with any commodity trading firm or any bullion bank, and it can trade surreptitiously through intermediaries. That's really, I think, what the BIS is mainly valuable for now. It provides camouflage to its member central banks for their intervention in international markets.
Well, probably JP Morgan, since JP Morgan got the exclusive contract to go buy more oil for the Strategic Petroleum Reserve. So I'm sure they're kind of like, they're getting all these insider deals and unbidded deals, whether it's EBT cards, all these extra fees from the government. So it's one of the 5 or 6 large, too big to fail banks here in the United States that are getting these contracts.
Yeah, look, my main point, Jason, is that government intervention in the markets and the economy is far greater than any ordinary layman suspects. And people don't suspect what they should suspect because mainstream financial news organizations will not report it. GATA has sent these documents to many major financial news organizations around the world. We send stuff to them, I'd say every other week. Anything we think is important, showing manipulation, we send it out, and it just cannot be reported. It's a state secret.
Well, also, like any of the producers, so in order to get on TV, so if you're a Peter Schiff or a Michael Pinto and you know Austrian School economics and you want to maybe talk about some type of manipulation, if you're saying that in the test interviews before you go live on TV, they're going to threaten to not put you on business television again. So if you say stuff like all these markets are manipulated, the Fed is juicing S&P 500 futures contracts to juice the stock market higher or something like that. Someone comes in at 3 p.m. or 3:30 p.m. and buys S&P mini futures contracts, $10 million or more orders, not-for-profit buys and stuff like that, or they're smashing the gold and silver prices at, I don't know, 3 a.m., 4 a.m., and they're blowing out stops. You'll be kicked off TV. You'll be blacklisted from CNBC.
No matter how obvious it becomes, you talk about those smashes at odd hours when there's no news that is relevant to the market. Even the most obvious stuff, it just can't be questioned. I mean, I think there's a Pulitzer Prize waiting. Any major news organization that wants to call up the CFTC and put to it the question that GATA and Congressman Mooney put to it years ago: is intervention by the government that manipulates markets subject to CFTC jurisdiction or not? I mean, the commission's refusal to answer is good enough. I mean, obviously, this is happening.
Well,
and the
Chris,
commission just can't answer the question because that would confirm the intervention.
Well, Chris, I think the people at the CFTC don't care. I think it's a revolving door of corruption. I know Craig Hemke wrote articles on this, but it's just a revolving door between the lawyers who are at the top of the CFTC, and either they end up back at investment banks or hedge funds, either in compliance or a lobbying firm here in the DC Metro or New York, or at a white shoe law firm that has enormous billable hours to the investment banks or hedge funds. So it's a revolving door out of all those things, where the CFTC, if they really strictly and heavily go after the banks and hedge funds that are involved in this shenanigans, then that means that they don't get their cushy 6 or 7 figure job later on, and they're going to piss off all their friends at the country club and all the charity events and parties.
Yeah, this is in political science, this is called regulatory capture. The regulatory agencies are almost always captured by the industry or interest group that the agencies are supposed to regulate. That's the nature of money. There's very little money in this country in pursuing the public interest in government operations. All the money is in defeating any government regulation in the public interest. It's an old story. It's not just in banking. It's in everything.
Yeah, it's in every major industry: big technology, big pharma. There's 5 or 6 industries now, with only a couple companies in each industry that have way too much control over the economy in the DC metro area. They get bailouts, they get fees waived, they get legal liability waived, all these crazy things that they get away with, all these major 5 or 6 major industries and only a couple companies in each industry. So I want to transition now to the lawsuits where the Gold Antitrust Action Committee has actually sued the Federal Reserve Bank. Did GATA actually learn anything interesting from the lawsuits against the Fed over the years?
Oh, yes. I think they're very, very important. Back, I think it was in 2001, our consultant, Reginald Howe, was a Harvard-trained lawyer. He happened to own some shares of the Bank for National Settlements back when the BIS had issued some private shares. I think they were shares that were supposed to be taken up by the United States government back in the 30s when the BIS was formed, but the U.S. didn't want to join the BIS then, so the shares were sold privately, and Reg ended up with a few of them. With GATA's support, he sued the BIS and the U.S. Federal Reserve and Treasury Department and a bunch of the bullion banks, complaining that the BIS and the central banks and the bullion banks were rigging the gold market. I went to the one hearing that was held in that case in U.S. District Court in Boston, and it was very valuable to me because an assistant U.S. attorney representing the Fed or the Treasury got up and moved for a summary judgment dismissal of Howe's lawsuit. Summary judgment is a mechanism in law where a defendant maintains that a plaintiff's lawsuit must be dismissed, even if everything the plaintiff complains about is true, because there is no remedy at law for the plaintiff's complaint. Well, an assistant U.S. attorney got up and moved for summary judgment dismissal of Reg Howe's lawsuit on the grounds of the government's claim that the government had, under the Gold Reserve Act of 1934, full authority to rig the markets exactly as Howe's lawsuit complained. Now, the assistant U.S. attorney did not admit that the Fed, the Treasury, were rigging markets. He was merely saying that, look, the U.S. government has the full power to rig the market exactly as Howe's lawsuit complained, and so this lawsuit must be dismissed. Now, as it turned out, the judge dismissed Howe's lawsuit, but not on those summary judgment grounds. He dismissed the lawsuit on a narrow jurisdictional issue. I think he found that Howe did not have jurisdiction to sue and have standing to sue, that maybe mining companies could have sued, but he dismissed the case on different grounds. In any case, I was there. I took it down. I wrote it up as a press release that's still on GATA's internet site. An assistant U.S. attorney said in U.S. District Court in Boston, moving to dismiss the Howe case, that the government claims the power to rig the gold market exactly as GATA and our consultant Reg Howe had complained. So, okay, that lawsuit was not nominally won by GATA, but I think it elicited some very valuable information. Secondly, we asked the Federal Reserve years later for access to all its gold-related documents. The Fed didn't really want to give us anything, and so we filed a Freedom of Information complaint. And in the course of the Fed's internal adjudication of our complaint, its board member, a board of governors member, really acting as kind of sort of like a hearing officer or arbitrator on our complaint, Kevin M. Warsh, wrote to our lawyer and declared pretty candidly that among the documents the Fed was refusing to give us access to were records of the Fed's gold swap arrangements with foreign banks. Well, we have a letter from the Fed acknowledging that it has gold swap arrangements with foreign banks. Now, that's not to say that the Fed at this moment is got any gold swap operating. But we do have a letter from a Fed Board of Governors member saying the Fed has gold swap arrangements with foreign banks. That was very valuable to us. Eventually, we brought our complaint to U.S. District Court in the District of Columbia, and the judge in the case looked at some of the documents that the Fed was refusing to show us, and decided that all but one of those documents were exempt from disclosure under federal free information law, but one of them was not exempt from disclosure, and that document was basically a report on the meeting of the I think it's the G7 Gold and Foreign Exchange Committee. So the judge ordered that report released to us. That we have that report on our internet site, and it showed that the financial officials of the major governments met at the G7 Gold and Foreign Exchange Committee and were striving to coordinate their policies about the gold market. Well, that's intervention for you. That's a proof of intervention. And further, since the Fed had, the court found that the Fed had illegally withheld that document from us, technically, the judge decided that GATA had won the case against the Federal Reserve and ordered the Fed to pay GATA court costs. And we proudly display on our internet site a copy of the Fed that we got, the check we got from the Federal Reserve Bank of Richmond for, I think it was about $2,000 court costs for beating the Fed in our lawsuit. Now, as a practical matter, we didn't get terribly much out of the Fed in that second lawsuit, but we did get the admission from Fed Governor Warsh that the Fed has gold swap arrangements, secret gold swap arrangements with foreign banks. And we did get that document, the record of the meeting of the G7 Gold and Foreign Exchange Committee, showing the financial officials from the G7 countries trying to coordinate their gold policies. Well, I think that those two lawsuits, I think, were very, very important in terms of the information they did elicit. The first one we lost, but we elicited valuable information, really a confession from the government that the government claims the power to rig the markets exactly as GATA says it's rigging them. And in the second case, we got the admission from the Fed board member that the Fed has secret gold swap arrangements with foreign banks. And we got the G7 Gold and Foreign Exchange report as well. So I think those two cases have elicited very powerful information.
And if we ever get another either partial or full Fed audit like Ron Paul got back in 2011, we may actually find out about the real size of the Fed's balance sheet, all the stuff that they've stuffed in special purpose vehicles off balance sheets and then their derivatives book. But I'm not holding my breath that Congress, either political party, is going to go along with this, because that would be like state secrets then if we find out what's really off balance sheet for the Fed.
Well, I think a serious audit of the Fed would find and disclose and analyze whatever gold swap arrangements Fed Governor Warsh was talking about. Now, the Fed, might conceal a lot of its gold information by saying that, oh well, the Treasury Department is the real owner of the gold. So any audit of the government's real financial position should include the Treasury Department as well as the Fed. But I'm with you, Jason. I'm sure that any serious audit of the Fed and the Treasury Department would blow people's minds.
Well, we only got a partial one back in 2011, and then Bloomberg News filed the Freedom of Information Act request with the lawsuit, and then the Levy Institute went through the 30,000 document data dump, and we found out that there was tens of trillions, over 29 trillion in secret bailouts, over 9 trillion went to the European Central Bank for bailouts during the 2008 financial crisis. I mean, the main thing that the Fed's been using for bailouts for years now are these currency swap lines, and GATA has really been one of the only organizations that's actually been covering all the stories on these things.
Well, the Fed and the major central banks around the world are all in this market rigging together, in my opinion. Look, we know from the WikiLeaks cables that the government of China knows all about U.S. gold market rigging policy. We know from a speech that was given by the deputy chairman of the Bank of Russia back, I think it was in 2004, Oleg Mazayskov, that the Russians, even back then, were aware of GATA's work, because the only words of English that Mazayskov spoke in this speech to the London Bullion Market Association meeting at the Kapinski Hotel in Moscow were Gold Antitrust Action Committee. Well, to the best of our knowledge, as of then, GATA didn't know that it had any contact with anybody in Russia at all. So obviously the Russians had been watching us and knew very much about gold price manipulation policy. If the BIS is involved in the gold market, as it is, that means all the major member central banks of the BIS know what is going on with gold, and that even the central banks in countries that are hostile to the United States must know all about it. I suspect that they are all working together for a revaluation of gold at some point. I don't know if I'll live long enough to see it, but I'm willing to bet my life that all the major central banks know about gold market intervention policy by the West and by the U.S. particularly, and that they're probably working together about a new arrangement for gold that will not leave the gold pricing power in the hands of the United States.
Well, I'm not sure if there's going to be a gold revaluation similar to what FDR did in 1934, but I can tell you that these non-G7 central banks, because they saw that $300 billion plus of Russia's reserve assets were just confiscated by the U.S. government for foreign policy decisions and part of sanctions. So these other governments that are not in the G7, that are not part of the club, post Bretton Woods, post World War II, they're seeing that, wait a second, even though the Fed's raising interest rates and we can supposedly earn a quote unquote risk-free 5% or something along those lines on US Treasuries, we need to diversify our reserve assets away from US Treasuries. And this is the new trend we're seeing. These non-G7 central banks, even though they could earn much higher interest payments buying Treasuries, they're buying gold instead over the last 8 to 10 months.
Yeah, well, certainly all these countries have seen that putting their assets in the custodianship of the United States is a big risk. And everybody thinks China is so smart, but to the best of our knowledge, China still has $1 trillion or so in U.S. Treasuries and other U.S. Government securities that could be frozen or nullified or confiscated with a few keystrokes. Is that the financial world that China or any other country wants to live in? Certainly, Russia, I think, has learned its lesson. That's not to make any excuse for the war that's being waged in Ukraine, but I think the United States has demonstrated that it's not really to be trusted.
So a couple more questions before I let you go. Who do you think is hurt the most by paper price manipulation? Is it mining companies or retail investors, or is there some other entity you think is hurt more?
Oh, I think it's hurt the whole world, Jason. Gold market rigging is a mechanism for rigging the all values, the value of all capital, labor, goods, and services in the world. If you rig the gold price, you're rigging the price of what is supposed to be the one sure safe asset in the world. You're also rigging the price of U.S. Treasuries. You're rigging all interest rates when you rig the gold price, and when you do that, you destroy the market economy throughout the world. So if one believes, as I do, and I think the others with us in GATA believe, that the market economy is a great engine of prosperity and democracy, well, then gold price rigging is a mechanism for destroying the market economy, destroying democracy, and destroying human progress. Certainly, some countries, commodity-producing countries, especially countries that produce the monetary metals, are probably more hurt by this than others. But really, all commodity exporting countries are hurt by it, and this especially involves the developing world, because all countries begin by developing their natural resources and exporting them. So gold market manipulation, I think, is a biggest exploitation of and expropriation of the developing world. But it is a terrible thing for everybody.
The private mining companies, so the publicly traded companies that are privately owned, that are not owned by a government, those companies are also hurt, but I don't see them talking in public about gold and silver manipulation. I don't see a lot of them donating money to GATA either.
No, they've always been a big disappointment to us. I mean, in fairness, we do have a few mining companies and mining entrepreneurs who have supported us. But as a whole, to me, the industry is a disgrace, but I have to understand it. You got to remember, the mining industry is probably the most capital intensive industry. Opening a mine can cost $1 billion or more and take many years. Because it's the most capital intensive industry, it's the most reliant on big banks, which in turn are in most cases government agents. The mining industry is the most vulnerable to governments generally, because the mining companies need mining permits to operate. They're subject to environmental regulations. They're subject to royalty requirements. Any mining company can be shut down or crippled by any government at any time, and any mining company can be crippled by its bankers, who in turn are really controlled by governments. So when GATA asks a mining company to complain about gold market manipulation by government, the mining company could think that we're asking it to cut its own throat.
Well, the senior executives at these mining companies, like I've had conversations with a few of them off the record over the years. I mean, they know that the markets are manipulated, gold and silver markets and the futures contracts and stuff. They don't want to say it publicly though, because then that means that they could get fired from their job, they lose their income, they could potentially also get blacklisted because a lot of these companies, like you said, they're so reliant on capital. These bankers are on their board of directors. So if they come out and start saying that like the gold market's manipulated, silver market's manipulated, I mean, the bankers on the board of directors will just have them replaced by a yes man who won't say any of that stuff or believe any of that stuff.
Yes, that's true. Courage has its price in this business, and it's very easy for me because I don't own a mining company. I don't have any government permits. Apart from my driver's license, I suppose, and my license to carry a pistol. So there's not much the government can do to me. But the government and the big banks can destroy a mining company, and so it would take an awful lot of courage for a mining company to stand up against the market manipulation. However, that's really what the World Gold Council should be for. The World Gold Council is an association of gold mining companies that purports to represent the interest of gold investors. If the World Gold Council took on this cause, it would provide a little protection for individual mining companies. But I long concluded that the World Gold Council exists to make sure there never is a World Gold Council.
Well, or they're too directly involved with GLD and the bullion banks, because look at the prospectus for GLD. I mean, only the custodians of the GLD and the SLV are allowed to remove the metal, right? So you talked about how one of the reasons there's a paper market manipulation and the physical market, there's people who, especially for silver, the industrial users still need the metal. But anytime there's a country, say India or China or Turkey, where the premiums are really high, you just see like GLD, the bullion banks are pulling out enormous tonnage orders of gold out of the GLD and then shipping it to where the premiums are higher, and they don't get in trouble for it. But the average person who owns units of GLD can't get any metal out.
Well, there's some of us who have suspected since GLD was put together that it is really it's another mechanism in the tool of the central bankers and their bullion banks to be able to use the public's investment gold to apply it to hot spots in the market to keep the price down. That it's another tool of gold price suppression, and I think what we've learned about GLD in recent years has strengthened that suspicion.
So last question, I want to get your thoughts on the amount of derivatives. So under oath at that CFTC hearing back in 2010, Jeffrey Christian said a ridiculously high number for amount of derivatives for every real ounce of physical gold and every real ounce of physical silver, whether that was at the COMEX or GLD or SLV. Do you think that those numbers are even larger over a decade later?
They might be smaller, Jason, simply going by the BIS reports as interpreted by Bob Lamborn, insofar as the BIS gold swaps are much reduced from where they were, excuse me, about a year and a half ago. That does suggest that at least some of the central banks and some of the bullion banks, under the influence of the new Basel III regulations, have gotten out of the gold business, or at least out of the paper gold business, or have reduced their paper gold positions. Now, Christian said that the ratio of paper gold to real gold was probably as much as 100 to 1, 100 paper to 1 ounce of real metal. Not long after that hearing, the Reserve Bank of India did a calculation and concluded that the ratio of paper gold to real metal was something like 92 to 1. In any case, I'm sure there's still a lot of derivative gold out there for which real metal could not be obtained anytime soon.
And the bullion banks, for listeners out there who are not familiar, the bullion banks make enormous profits off these derivatives. They're so opaque So there's they can hire specialists, they make enormous profits. And if the bank gets in trouble with these things, you see the government step in and do bailouts. I mean, whether it doesn't even have to be gold derivatives, it could be interest rate swaps or bad loans. I mean, look at what happened with Credit Suisse and UBS in the last couple months.
Well, that was really what the gold carry trade was about 20 years ago. I think the U.S. government figured under Robert Rubin's advice that that the central banks could lend gold out for say a small fee, 1% interest a year, and bullion banks could sell that gold and put the proceeds into U.S. Treasury bonds that were paying, say, 5% a year, and collect a risk-free spread of 4% per year, and they would get away with it as long as there was no short squeeze in gold, and if the banks had assurance from governments that the governments, as Greenspan said, stand ready to lease gold in increasing quantities should the price rise, then the big investment banks, the bullion banks, would be able to collect their risk-free spread, and in the process, they would be driving down interest rates and driving down the interest that governments would have to pay to borrow money. Now, this blew up when the Bank of England went into the market to sell its gold to help cover some short positions back then. So it did blow up because there was more gold leased, I think, than the central banks realized. But nevertheless, central banks were leasing gold at a very low percentage rate of interest. To banks, the banks were selling the gold and using the proceeds to buy government bonds, and they made a lot of money collecting a risk-free spread.
Yeah, it's risk-free until it blows up, until the bank blows up for whatever reason,
Yeah,
and then it needs to be bailed out.
But you're right. Well, when it blew up,
wasn't Bear Stearns?
The government bailed them out.
There was a lot of circumstantial evidence, right, that Bear Stearns, one of the reasons they got in trouble, besides their subprime real estate holdings, was their silver short position.
Yeah, I know that that is suspected too. I can't document it, but there is reason to think so. But look, the British economist Peter Warburton wrote an essay back in 2000 or 2001, which is on our internet site. It was called, what was it? Something like the devaluation of our world currency. It is inflation, but not as we know it. Warburton hypothesized that central banks could rig all the commodity markets with derivatives for the cost of maybe a mere $200 billion of investment, and that they would be able to support their currencies and control interest rates through derivatives, short selling commodities. I think he was exactly right, and he saw this like 23 years ago.
Well, they papered over. I would agree with that. I read that piece as well. It's excellent. It's over 20 years old. He basically talked about how they can hide the real inflation rate for many, many years. The problem now is you have a global population that's over 7 billion, and you have all these supply side problems on all these commodities. So you have all the ore grades falling, the cost to build a new mine, the lack of cheap energy and electricity, all these things for mining companies or for consumers and cheap electricity and businesses. So you have now, because the industry didn't have high commodity prices, they haven't gotten the ability to raise capital to make investments into the supply side. So yeah, the governments and central banks and stuff got away with inflation for all those years and preventing commodity prices from rising. Now we're stuck with the bill and all these supply side problems with all these commodities.
Yeah, this is, all going to blow up eventually, and I think central banks are going to try to get to it first through a gold revaluation, because I don't think they can let it happen by itself. They've got to make it look like they were in charge of the revaluation, and I think it'll be favorable to all commodities. It won't be so favorable to those of us who are just working for a living.
Well, I hope you're right about that, but unfortunately, it looks like the governments, like the Davos crowd, and are looking to copy the China model, and with central bank digital currencies, cashless society, social credit score. I mean, it doesn't look like they're planning gold in that. So hopefully, like, the people will be able to figure out how to stop governments and central banks from consolidating even more power and control and forcing us into digital currencies and banning cash and stuff like that.
Yeah, central banking can be a very powerful, probably the most powerful instrument of tyranny, and I hope people will start paying attention to it.
Well, if you see the old quote from Lenin, I mean, he basically said that 90% of socialism was getting a central bank established.
Yeah, well, look, it can be used for good or for ill. I think they've just gotten out of control. Power corrupts. Absolute power corrupts absolutely, and the power to create infinite money is the biggest power of all.
Yeah, also picking and choosing winners and losers with bailouts. So like if you're a large bank or a hedge fund or a large corporation, you've gotten artificially cheap debt, artificially cheap capital for many years, or a bailout, whereas the average person or small business owner, person on Main Street, has gotten currency debasement and tax increases, or as I call it, stagflate tax lie.
Yeah, well, I'm hoping the political system will respond to this, but people are going to have to wake up.
I don't think having lived outside of DC for over 20 years, I'm not optimistic about that, especially when you see like the Democrats like Nancy Pelosi, and they're in bed with the large banks and corporations, and even like the socialists, they're hypocrites, champagne socialists. They're the ones that are talking about their stock trades and their real estate deals, like all the stuff's off when they're not in front of TV cameras. They're all talking about like how to make more money and how to get richer or get rich quickly.
Well, the closer to the money production you are, the better your chances.
Oh, yeah, that's the Cantillon effect. Okay, well, Chris, I really enjoyed our discussion today. If my listeners want to check out the work on GATA, how did they do so?
Oh, thank you, Jason. The Gold Antitrust Action Committee's internet site is gata.org, and we have a couple of sections there of documentation that might be of interest to people. We can document everything we say. We also run a almost daily newsletter of material that might be of interest to people interested in the gold and silver sector. You can sign up for that in the I guess at the top right section of our internet site. You can sign up for an email dispatch every time we have something to alert people to. Or you can sign up for our daily summary dispatch, so you only get one email a day at most. And if anyone is looking for any documentation, has any question about what we're doing, I welcome questions at my email address, which is cpowell, CPOWELL, at GATA.org. Write to me and I'll try to find what you're looking for.
And other than Wall Street on Parade, GATA has been covering currency swap line bailouts longer than anyone else. So you guys are doing an awesome job over there. Also, one last thing, GATA is a not-for-profit organization. So for our listeners, I know there's still about, 5 months left in the year. But if you want to donate some money to GATA so the organization can still run, GATA provides a very good service with information that the mainstream financial media honestly just won't publish.
Yeah, thank you, Jason. I should have brought that up, but if you want to help us out, there's a section on our internet site on the left side of the page. It says how to help. You could open that up, and it'll tell you how you can send us a check. And yes, since we are a 501c3 charitable educational organization recognized as tax exempt by the U.S. Internal Revenue Service, then any contributions to us are federally tax deductible in the United States.